India and the United States are pushing to strengthen economic ties, even as uncertainty looms over U.S. tariff policy. Now, Washington and New Delhi are aiming for a merger that reshape exports, jobs, and global supply chains. India and the U.S. have been negotiating a bilateral trade pact designed to boost two-way commerce towards a target of $500 billion, up from about $132 billion in 2024 to 25. Now, with the United States as India's largest goods export destination, negotiators released an interim trade framework in early February, aiming to reduce U.S. tariffs on Indian goods. A big relief for sectors which were hit by punitive levies. But the picture is in flux. A recent U.S. Supreme Court decision struck down Trump's earlier tariff authority, forcing Washington to impose a temporary 10% tariff on all imports, with plans to raise it to 15%, the legal maximum. Now, this has put the previously agreed 18% tariff target on hold, complicating the final details of the interim deal. Talks between negotiators were rescheduled as both sides seek clarity before moving ahead. India's Commerce Minister Piyush Goyal met with U.S. Commerce Secretary Howard Lutnick and U.S. Ambassador Sergio Gore in New Delhi. Both sides called the discussion fruitful, stressing the ongoing cooperation and economic partnership. Officials say the channels remain open and trade negotiations will resume once tariff certainty returns. Tariff clarity matters. India exports nearly a fifth of its goods to the U.S. market, particularly textiles, leather, seafood, carpets, and gems and jewelry, industries that were hit hard by prior 50% levies. A stable deal could make Indian exports more competitive while ensuring market access for U.S. products. But both sides are cautious, balancing trade interests with domestic concerns.